Welcome everybody. Good morning. I'm Chad Gilfillan. I'm a Senior Vice President here at Red Cloud Securities. Joining us today to present GoviEx Uranium is Daniel Major, CEO. GoviEx has a portfolio of assets in Africa of various degrees of advancement, its flagship assets being Maduela in Niger. With that, Daniel, I'll turn it over to you. We have 15 minutes to present, and then there was 5 minutes for questions. So please, viewers, send your questions in. Daniel, over to you.
Thank you, Chad, and thank you for the invite to the Red Cloud Uranium Conference. Always a pleasure to work with you guys. So GoviEx, we are an Africa-focused uranium company. All our projects are in 3 different countries. We have our disclaimers and cautionary statements. For those interested in reading those, please go to the website. So, as I say, we are very much a development-focused company. We've structured our board. Our strategy is towards the development of our projects. We have 3 different projects, but what separates from our peers generally is that we have 2 fully permitted projects, one in Niger, one in Zambia. We've been very focused on our Nigerian project. We've been focused on getting it simplified and moving towards its feasibility study. We're currently working on structuring the financing and the offtake and completing the feasibility study. We've got an exceedingly large mineral resource over our 3 properties, but considerable exploration upside on all 3 of those. And the 3rd project is Falea. It's an exploration play. It's got uranium, gold, copper, and silver all associated with the property area. As I say, we are only in Africa, Niger, Zambia, and Mali. These are all mining jurisdictions. Niger, obviously famous for its uranium production since the early 70s. Zambia for its copper for as long as that, and Mali has recently become the 4th largest gold producer in Africa. We like it because the permitting processes are straightforward. Niger, we got our permit within 6 months. The mining codes rarely change, particularly in Mali and Niger. And the governments are all GDP driven for mining. They are focused on the development of the mining industry, and as a result, employment is available, the infrastructure is available for our projects. I'll briefly just go through some comments on the market because I'm sure you'll hear it from all the presenters, but really we're looking at strong demand out there driven by the Southeast Asian market, particularly China, the Arab Emirates, India. You've got a lot of change recently with commitments to green energy by major governments around the world, the US, Japan, Canada, UK amongst those. China's come out with a very strong commitment to growth, going from 48 gigawatts in 2020 to 120 gigawatts by 2030. Japan's reiterated its start to get up to 20% total energy from nuclear and has just recently approved the first reactor to go past 40 years. We now have reactors in the US being approved out to 83 years of life. So nuclear is very much becoming part of the green development that is required to take us to a carbon neutral position. On the demand side, to try and keep up with that, the problem is we actually have declining supply going out there as we go forward. Certainly on the primary side, there are a number of projects out there, either in development or idle, but they all need much higher prices to come forward. But I think more interesting we're seeing now is a complete collapse in the secondary market. UxC, for example, in this last year, forecast 180 million pounds to be consumed, of which 125 million came from primary production. The rest came from secondary. And if part of that secondary, 30 was utility drawdown. They're assuming over the next 5 years, the utility drawdown will be the equivalent of 30% of US and European total inventory. So inventories are disappearing. Interesting as well is the uncovered position in the US is 40% by 2024, 70% by 2026. Europe, while well covered in the early years, by 2026 is up at 40% uncovered. So we're seeing inventories declining, helped by increasing buying from financial parties or developers, the uncovered position out there, and secondary supply is just gradually fading away. And we need better prices to fill the gap. At the same time, we've already started to see older mines closing down, and that trend will continue as well. So GoviEx is positioning itself as a developer. We've got our projects permitted. It's about taking them and helping fill that gap that's in front of us. And as I said earlier, our strength is that we're actually already permitted. We don't have to wait for those legal requirements. It's about financing those projects and getting them ready. We start with Niger, where we own an 80% stake. The government owns a 20% stake. We're next to the Areva mines, Cominac and Somalia, with Cominac recently closing at the end of March. And as a result of that, we have roads, power, water, and a very strong relationship with the government in Niger. We recently put out a pre-feasibility study, updated it. We reduced our costs, both operating and capital. This is one of the lowest cost OPEX producers in Africa now. It's a long life mine, out to at least 20 years. So going in at about £2.5 million per annum, and we'll continue with exploration to go further. We've shown it can service debt in the $50 range as well. So we're fast tracking it through the next stage into final feasibility study. Our second project, which we're also very excited about, is Matanga down in Zambia. Again, all the infrastructure's there, road, power, people. It will go at £2.5 million per annum for at least 10 years. Again, a lot of exploration upside. We have trenches there that we intend to start drilling for extension on our resources this year. It's a very low cost capital. It is actually almost the lowest capital cost project in Africa from an intensity point of view. Long life, very simple to build. We will start drilling on here to do the infilling of the resource on the Dibwe East this year, and are starting to move this project very positively towards its final feasibility. Benefits from low stripping ratio and low acid consumption. And then Mali, this is a uranium exploration play. Started originally in the area you see circled with a 1, which is where Rockgate put down 30 million pounds of uranium. Since we've got hold of it, we've started looking at the other potentials. We note we're on the trends for both Siboyaya West and Siboyaya gold trends, and we're looking at that particularly in our Bandini license, because we won't find uranium and we'd rather recover value for that license rather than just hand it back to the government. But at the same time, we've been doing IP work over the uranium deposit, and we're currently doing IP work in the field at the moment to try and understand what the full extent of the uranium exploration is on this property, because the previous owners very focused themselves. We understand now that they actually had misrepresented where the fault was going, which is the key driver. So there's a lot of potential here for that. And in addition, we're trying to understand where the copper and the silver is coming from that is loading into this unconformity style property. We just recently changed our board, adding in Selma Citero and Eric Kraft. We've now got very much a team here that is well designed for development of a project, the expansion of those projects, taking them through to the development stage. We are well cashed up at the moment. We've got about $10 million of cash. That's more than enough for the next 12 months. We've got some major shareholders. We do have a debt on the balance sheet, but that's to the Nigerian government, and it bears no interest and is actually not due until well into next year. But really, from a valuation point of view, in the previous cycles, the guys who rate the real returns have been those who've gone from a developer to being producer, very much GoviEx's position, or the takeout stories, which have mainly happened in Africa. But as you can see here, and thank you, Red Cloud, for these numbers, you know, the Africa projects are bringing up their relative value against Australia and the US. And GoviEx, in my view, is falling behind, and for no real reason. We have 2 permitted projects. A lot of our peers do not. These are projects that can easily come to market and well within the 50s. There are projects out there, particularly in Africa, with much higher operating costs and capital costs. So we have very robust projects, and there's a lot of value for investors to be had. So we do believe in the market. We have an experienced management team. We have substantial resource with a lot of exploration upside. We have 2 excellent properties of almost equal potential, and our plan is to move those through to the development stage. But key, we have those permits, so we don't have to wait for those. We just working with the market as we drive forward and try and improve our projects as we take them to final feasibility study. So I'd like to thank you for listening to my talk. I'll turn it over to the Q&A session. Thank you, Chad.
Yeah, thanks, Daniel. A very efficient presentation. Obviously, one question we have coming from online is in Niger, what stops you from being able to use the existing infrastructure next near your mine with Areva?
Yeah, the Cominac property, which was closed down, it's a very, very old plant. It's highly inefficient. It's very costly to operate. And the board of Cominac ultimately decided that it actually, from a liability point of view, what they wanted to take it down. The other thing to remember that when you take on something like that, you don't just take on the plant, you take on all the downstream liabilities, including all the tailings dams as well. So it's not just a case of taking on the plant. The process design there doesn't fit with ours. We have a much better recovery. And we have a high molybdenum grade, and that plant was not designed for molybdenum either. So we get about 10% of our revenue stream from moly. So better use of the resource for the Nigerian government.
Right, okay. Highlight, that's a good valuation slide. You highlight GoviEx relative to not only the African projects, but globally. Obviously, we're going to need uranium coming from everywhere, but what would you say what would it take for GoviEx to fill the valuation gap? What do you think differentiates GoviEx relative to the others to highlight to investors?
Yeah, as I was saying earlier, I mean, if you look at our two projects, I mean, we've got one of the lowest capital intensity projects and one of the lowest operating costs projects as well sitting out there. They're both permitted. So while others are waiting to get their permits, we're in mining, both in Zambia and Niger. These are very much mining countries, and particularly Niger, which is a uranium. They've just lost Cominac, so we've got a lot of government support behind us as well to go forward. These projects both work well in the low 50s. And so that's the same, a lot of the startups that you've got out there as well, restarts that are out there. So there's no reason for us to be behind there. We've got strong backers, and I certainly think we have the management and the board to drive this. So I see that fully as an opportunity. I've seen some project companies go off who've got operating costs way higher than ours and really have much less likelihood to get there, whereas GoviEx has a very strong likelihood to get going. And we're in nice jurisdictions.
Yeah, and because Maduela is such an advanced project, and that's where largely a lot of the focus has been, I think many maybe forget that you actually have a strong pipeline and portfolio of assets. There was some recent news on Mutanga, just clearing things up with the government. Is that, do you see further spending and work on Mutanga in the next bit?
Yeah, absolutely. And I think, that's part of the problem last year is that because we had problems with the license in Chirundu, people kind of forgot Mutanga was out there. Yeah, no, very much. I mean, as I said in the presentation, we will now be turning the drill rigs on there. We'll be doing the infill resource drilling for Dibwe East, but more importantly, there is a series of trenches along strike that we'll start drilling out as well, just to show the resource expansion. One of the benefits of Mutanga is we actually acquired two projects that had already gone to PFS. So all the metallurgical test work had already been done to show that the heap leaching, and this is a very simple heap leach operation, had been done by two different groups and got the same answer. So, for us to take this now through to its final conclusion in Zambia is very easy. So, these two projects are very competitive against each other internally within the group, but we go with the Nigerian one first because it's OPEX, and also we have stronger deliverables with the government, but expect Mutanga to start catching up.
Yeah, excellent. And then turning over to Falea, obviously there's some interesting geology happening there, and again, it's kind of fallen to the wayside of the other assets, but with the gold and copper and silver, there's certainly a bigger system at play here. So just if you could maybe run us through kind of your budget and thoughts on near term and then longer term, what to do.
Yeah, this year we've put in about $500,000 to it. Most of it will be finishing soon because the rains start soon. So once the rains come, we can't do very much anyway. So we've done some gold drilling. I'm waiting for those assay results to come through. They're on the Medini license. As I said earlier, Medini just will never have uranium. It has not got the geology for it. It's all beryllium. So, because we had the gold soil samples on there, and you can see it's a Sibaya trend, clearly we would like to do a strategic angle on that one, but we need to show that it has the potential. On Falea and the Bala licenses, clearly the guys at Rockgate before had very much focused them in one place, and we really need to understand where the big picture was, which is why we've been doing the IP work on that. And certainly the initial results that we're seeing, which we'll probably present out, show there's a much bigger system sitting there. We can see there are IP targets under the ground as well, and the sea tie beautifully to the fault structures. And where we did an assay program last year on some of the older drill core, we again were showing gold along the fault structure as well. So there's a lot of work to be done just to understand it. But I think what is exciting is there's so much potential, and we know we're getting gold, silver, and copper and uranium already there. So it's a known set of minerals. We've just got to figure out where the core of them is.
Yeah, notes on from a question online, the question asking kind of what percentage of locals do you employ at your projects versus expats, and how do you manage that, I guess?
That's a pretty easy number. It's 100%. I have 4 people in corporate. I have nobody and no expats working any of our countries. And I see no reason why we should. Niger has been mining uranium since the early 70s. The whole of Orano's Nigerian operations are all Nigerian. Our Zambian guys are brilliant geologists, and same in Mali. I mean, I'd stack them up against anybody else. They certainly know their geology, they know their region, and they're local, and they understand the climate they're working in, which is important, particularly somewhere like Niger, where in the middle of the summer it's 50 degrees in the shade, centigrade. You know, you've got to know how to operate in that kind of environment, and they're great guys, so I have no problem. And the wonders of Skype and Zoom mean we can talk to each other every day.
Yeah, great. It's the mining world, and especially is a small world, but uranium world is even smaller. What are your do you see M&A eventually taking hold of the space? Do you see GoviEx participating at all at some point?
Yeah, I think M&A will always become into. There has to be a form of consolidation from different places. As I said, if you looked at the previous cycle in 2011, there was a lot of M&A, particularly as the guys who need the utilities, or the SOEs for the utilities who needed it, the Chinese and the Russian, came in to secure 100%. So that's why they went to Africa and picked up the projects they could and just basically, well, took them all out. So I was talking to people the other day who were involved in a lot of projects in Africa, and they say every time they get them towards debt financing, somebody turns up and takes them out. So, that's exactly what happened in the last cycle. I think you're going to see a lot of consolidation in this industry. Utilities want diversification, but if you look at a lot of our peers, most people only have one project. That's not a pipeline, and a lot of the projects are quite short life. So, one of our advantages here is that we have long life projects. Madahuela, for example, while it's 20 years, could go on as long as 50 years. That's how long Cominac was mining for on the same area of ground.
Yeah, and then it's on Madahuela. What do we see there for the balance of the year? I know you're working hard on the bankable feasibility study, and obviously offtake discussions have to eventually occur and all that kind of fun stuff. So with that and the other projects, kind of just to close things out, what do you see for the year?
Yeah, for the year on Madahuela, in general, and it'll affect all of the companies. You expect us to see, obviously, the feasibility study. We've got some test work to go out. There's a sample going out to do that. So we're pushing to see what we can do and optimize it further, bring the cost down. I got some ideas on that. We obviously brought Chris Lewis on board, a guy with 28 years of experience in selling uranium to the utilities. And I've done 10 different US utilities with him in the last 2 weeks, talking to them, and he knows them all and knows them very well. So we're well placed there. We are already starting to look to see who our financial advisors will be to take us through to the debt and financing structure on Madahuela as well. So that messaging coming through. Zambia, as I say, will start with the drilling, move into the met test work to prove up the column leaching on that. And then Falea, really, we're coming towards the end of most of the work on that one this year because the season's just changing against us. So once the rains come, we really can't get going until about November, but that will give us time to kind of look at the work we've done already on the exploration this year and then figure out what we're going to do with it next year.
Okay, great. That was good Q&A, Daniel. Thanks again for your time, and good luck this year on your projects. And I encourage everyone to take a look at GoviEx for the uranium disclosure. Thanks again.